Hello, it's Robert Miner with Dynamic Traders Group with a relatively short video about one or two markets which we might have a trade setup coming up in the days ahead that I do for our YouTube followers and our Twitter followers. Now, I haven't done one of these videos in almost 4 weeks. Been pretty busy during the holiday season and these last few weeks of the year, but we're back. Hopefully, I'll be back doing them about once a week again. So be sure that you subscribe so that you can get notified when we put a new video up. So these videos are a shortened version of what I do for a DT Report subscribers. They are educational as well as an analysis of current market positions. So what you learn in these videos, you can apply to other markets and other time frames. So they're worth your while even if the market we talk about is not a market that you follow regularly or trade regularly. But today we're going to talk about one of the most important markets, or I should say one of the most popular markets. Well, it's important and it's popular, and that's the gold market and its relationship, at least in the last year or two, to the CPI report. Now, that report came out just last Thursday. I'm going to show you some interesting information and how you can use that report to identify a potential, at least, high probability trade strategy in the gold market. So this information that we give today is going to be relevant right now, this coming week. Before we get started, by the way, I've mentioned this in past videos, my book, Dynamic Trading, it's a reprint from 1997. It's as relevant today as it was then. It's a big book, a lot of information, a lot of charts. It's only $79.95 if you don't have a copy yet. What are you waiting for? The link to access this book and to purchase it is right down below in the comments. So check it out. You can hit that link. You'll go to Amazon where you can order this book if you don't already have it. Great education. Education is really important. Okay, ready to get started? Let's take a look at the gold market, potential trade setup coming up in the next few days, as well as some information on how you can use these CPI reports that come out once a month for specific trade strategies. Let's get started. Well, this is the gold weekly chart. Now, those of you who have followed this YouTube channel and past analysis of gold, you'll know that several weeks ago, right around in this period, just before the holidays, early to mid-December, I was looking for gold to have a potential to make a weekly high. And again, what we look for is a market position that has a high potential probability of a particular reaction, and that's in this case for a weekly high. Well, as you know, gold just went sideways for a few weeks, never did make a weekly high in a decline. And of course, the last 2 weeks has just surged up in a lot of buying and a couple strong up weeks. A lot of people get real excited when there's weeks like this. What we want to know is the gold market in a technical position to continue a bull trend, or is it near some extremes from where it's usually in a position to make, in this case, a weekly high, maybe a multi-month high. So a few weeks ago, before we look at the right up to date, as of the time I'm recording this, this was really looking like what we call an ending diagonal. And it was just, everything seemed to be perfectly together to complete a weekly high. That didn't happen. That's the nature of trading and the nature of technical analysis, is you not only identify the probable position of the market and the probable outcome from the current position, but then, of course, trade strategies are the key to it all. So we never had that reversal signal and for a weekly high in gold, but right now we're in an extreme position that I want you to know about and be aware of, and then look how it relates to the CPI report in the past and probably in the future. So here we are again with the weekly data, the weekly momentums, and I'm using a little bit longer look back. We call this the 1321, has been dual look back overbought for several weeks. It has not made a bear reversal yet, though. But, and I'm using this a little bit longer look back because it's a little bit smoother data. And when it gets to overbought or oversold, it's a very strong warning, at least, that the gold market is near a fairly significant reversal. and this longer look back. So the last time that these momentum cycles were in this extreme overbought position was back near the March high. So that's a wake-up call that we're now in a higher time frame, longer look back momentum cycle from which fairly significant reversals are made. So we want to be on our toes. Also, look at the high to high. I've just marked off the highs, the weekly highs since March. And you can see there's 6, 7, 8, and 9. So it's 69 weeks high to high. That's a fairly wide spread. But what it does for us is it gives us the probable minimum time before a weekly high will be made and the probable maximum time from when a weekly high will be made. I wish that these cycles were just one fixed length and, every 7 weeks, let's say, the market made a reversal. We wouldn't need any other information, but that's not how it works. However, they are fairly regular within a range, or particularly if they've shown to be that, we want to be alert when they get near the extreme. So the longest high to high, since the last March anyway, has been 9 weeks. This past week, the week ending January 13th, was week number 8 from the last high in mid-November. So next week is week number 9, which should be the maximum time before a weekly high is complete. So we've got our momentum cycles, the very strong, smooth momentum cycle is in a position to make at least a weekly high. We have a strong high-to-high time factor that the maximum time to complete a weekly high is next week. So we really want to be alert that while these last 2 weeks were really strong advances, in that they're coming into a position to where they're probably going to make a reversal that's going to last at least several weeks. And that's what we mean by weekly high, is that when the reversal is made, at a minimum, we anticipate 4 to 5 weeks trading in the opposite direction. So this is the daily data right up through Friday, January 13th. And the last couple of days were, of the week last week, boy, really strong up days. And of course, Thursday was the CPI report. Let's take a look at where we're at and then look at reactions at prior CPI reports. This is the daily momentum cycle, and the daily momentum, again, it's a little bit longer look back, a little bit smoother, is dual look back overbought. That's really significant. Weekly dual look back overbought, daily dual look back overbought, these a little bit longer look back periods. Look at when the last periods were when the daily momentums were dual look back overbought. A high, not significant, but it lasted about a week and a half, 10 days, something like that. And then here we're back in late September, early October, a high that lasted a few weeks. And then we go back to the prior one back in August, a high that lasted a few months, well, a few weeks anyway. So we're at that position again. So that's at least a wake-up call that gold is probably at or near, again, that weekly high, something more than just a daily high. It's going to last a few days. Now let's take a look at these CPI reports. I've got the dates of the CPI reports for the past several months. We'll just begin with August. What's significant is that you can look at them, just look at them, and you can see, boy, I really want to be alert whenever a market's trending into a CPI report, because frequently it makes reversals. Not all the time. What's the ideal setup? Well, the ideal setup is trending into a report that has a recent history of having significant reactions to the report when the daily momentum cycle is at an extreme, either overbought or oversold. So back in August, came into that report on August 10th, the daily momentums were dual look back overbought, an ideal setup to complete at least a daily high. In this case, it was a multi-week high. What about coming into September report? Is that coming into the September report, the momentum cycle was not overbought, but the fast line of the 13 was overbought. That would at least warn us that the market was near a daily high. It turned out the report was a catalyst to complete about a 6 or 7 day correction followed by a resumption of the trend to a new low. October, the momentum cycle is just in the middle of that cycle. It wasn't overbought, oversold, not even near overbought or oversold. So the trend just continued after that report day. How about in November? Well, in November, boy, what a big up day the report day was in November 10th. The fast line of the daily momentum cycle was overbought, so it wasn't in a position yet that's a high probability to complete a daily high, but it warns us that the upside should be very limited, and after this report, the market just continued up rather modestly for another 3 days before it had a temporary high that lasted about a week and a half. In December, the day of the report, boy, it was a big up day, but look at where the momentum cycle was. It was right in the middle of the cycle. So again, no significant reaction, a couple days down, and then it continued the momentum bull trend, which was indicated by the momentum cycles. Well, here we are, January 12th, the report day. On report day, the daily momentum cycles were dual look-back overbought, and of course, I think the day before that, they actually reached dual look-back overbought. While Friday was an up day, when we put the daily momentum cycles in a overbought position, when we have this cycle, real high probability of completing a higher time frame, in this case, a weekly reversal. So nothing's guaranteed, but more than likely, we're within a day or two of completing a higher time frame, weekly high. You should be aware of that, be prepared for that. And what also indicates that's a good probability. The other thing that indicates that is we had the breakout from this area, which I was looking at that as a potential ending diagonal. That's in Elliott Wave terms, but then the market accelerated on a breakout to new highs. That's very typical of the final stages of a trend. Now, this was a very mature trend coming off the late September low, and who gets in the market on a breakout after the market's been advancing for several weeks? I hate to say this, but it's the amateur traders who finally jump into the market after the trend has been net bullish for weeks, and then it breaks out and makes some news, and then they get into the market. They accelerate the market, and what frequently happens, I want you to be aware of, is there is a pretty serious capitulation when the reversal is made. So now you know what to be prepared for early next week. Remember, it's trading strategies that are important. We now have an idea that the technical position, both in pattern and price and time, dual time frame momentums are all in a position to potentially complete that weekly high. Now you have to formulate reversal and reversal confirmation entry strategies for potentially on the short side or the bear side. More than likely, gold will make what we call a weekly reversal by next week, and gold market will be sideways to down for 3 to 4 weeks or so. It's the same with silver and the GDX. Just be aware that's a very high probability outcome of the current position of these markets. Well, that's it for today, my friends. If you'd like to get more updates, join our DT Traders News at dynamictraders.com. It's absolutely free. We don't need any charge card or anything, just a name and an email address, and we'll let you know when we have other updates during the week. Also, be sure and subscribe to this YouTube channel if you haven't already subscribed, and check me out on Twitter at bob@dt at Twitter. Okay, that's it. I'll be back with you next week, I hope at least, and hopefully you have a fantastic week, a safe week, and take advantage of the information that you just learned here today. That's it for today. It's Robert Miner, over and out for now.